What is going on, you beautiful humans? Today, we're going to be having a money talk about something that is probably happening in your family right now, whether you're on the giving end or the receiving end. Now, I'm sure you've heard of the Bank of America, Wells Fargo, Chase, but did you know that one of the biggest lenders in the world today is actually your parents? The bank of mom and dad helped fund over $47 billion in U.S. home purchases in just 1 year. Now, that is bigger than most regional banks. But here is what's not being talked about enough. This money is not free, and increasingly, it's coming straight out of retirement accounts. So today, we're going to be breaking down why this trend is creating problems for everyone involved and what you can do about it, whether you're the parent writing the checks or the adult child receiving them. So let's actually start with the numbers because they are staggering, and parents are giving adult children an average of almost $1,500 per month, according to savings.com. That is not just help with a down payment, that is covering rent, groceries, gas, cell phone bills, and hey, even in some cases, vacations. And it's not just like young people fresh out of college. We're talking about millennials over 30 that are still receiving nearly $900 a month on average from their parents. Now, I know some of you are thinking, well, my parents aren't giving me $900 a month, and trust me, mine aren't either. I have bootstrapped so much that I think I've actually got a wedgie, but the average tells us something important. There are families out there where this support is massive. It is consistent, and frankly, it's unsustainable. But here's where it gets concerning. More than half of parents surveyed said that they're making sacrifices to their own financial security just to support their adult children. We're talking about people reaching into their 401ks, taking out reverse mortgages, or delaying their own retirement. This isn't just numbers on a spreadsheet. This is about real families making impossible choices. And I want to share some perspectives from people living this reality. Not necessarily direct quotes, but the sentiment I'm seeing out there. There are 30-year-olds who did everything right according to what their parents advised when they got scholarships, they got advanced degrees, and they got good jobs. And they still can't afford a modest home without family help. And in some cases, the only way that they could break free from renting was through a family member's life insurance payout. And think about that for a second. The path to home ownership should not require someone dying. Now, on the parent side, I'm hearing from people who say that their spouse's death was what finally allowed them and their kids to get out of debt. And that is not financial strategy. That is winning a lottery ticket that you never want to win. And there were obviously some financial habits that were likely not very healthy. But some people will say, and I hear it, that these kids just need to save longer and be more disciplined. And hey, look, I am all for discipline and smart saving versus living a lifestyle that you think that you deserve instead of the one that you've earned. I have made entire videos about building your emergency fund and the power of your first $10,000 through consistent investing. I had roommates all the way up until I met my wife. I was house hacking before it was coined a hack, but the advice ignores what is actually happening in the economy. I have watched people save diligently for years only to see housing prices shoot up and make their down payment worthless. But that's not just the housing price. It's the fact that the power of our dollar, it's shrinking. It's like trying to catch a moving train on foot. And it's not just housing. When you're stretched very thin, every decision becomes about survival rather than building wealth. You're buying cheap groceries that might cost you more in health expenses later, and you're skipping preventative care because you can't afford the copay, and that is going to cost you dearly later down the line as well. And I have mentioned this before that as a nurse, I have seen firsthand how financial stress literally makes people sick. The idea that everyone can just bootstrap their way to financial stability ignores a reality that some people just have family safety nets and others are walking a tightrope with no net at all. And that is actually where the comparisons will eat you from the inside, because you'll say to yourself, well, they make the same amount of money that we do. They have small kids in tow just like us. How come they actually get to do that and we can't? Look, even when family help is well-intentioned, it often comes with strings attached. And I'm not talking about reasonable expectations here. I'm talking about control over major life decisions. Now, there are some parents out there who give money to an adult child with some conditions, and sometimes those conditions are smart financial guidance. I'm totally behind that. But often it can extend into personal choices, where you live, who you date, the career decisions, whether or when to have kids. And I'll tell you what, if you love your parents, well, that is one way to drive a wedge between you and them quite quickly, and it's going to be deep and hard to fill. But I've actually heard people tell me, like, whose parents will say to them, like, they'll say things like, hey, don't worry, when I die, you're going to get everything. But nobody should be banking on someone's death to achieve financial stability. That is not a plan. That is a hope wrapped in a guilt trip. The financial help that you receive today can actually delay your independence tomorrow. You become dependent on approval for every major decision, which keeps you from building the decision-making muscles that you're going to need as an adult. Now, of course, there is a growing trend of parents giving what they call early inheritances, and my wife and I have actually talked about this. So on paper, this can make sense. A $250,000 gift at 30 does way more for their lives than probably $1 million when they turn 60. The math is just solid there. But here's actually what is happening and scary. So parents are financing their paid off homes to give their kids cash now. They're essentially betting that their health will hold up, that they won't need expensive care, and that their kids will make good decisions with the money. Meanwhile, their kids are getting used to having this financial cushion, which can actually make them less likely to develop those skills that they need to build wealth independently. I have talked to people who know they'll inherit property someday, but the homes most of them are going to be old, they need work, and by the time that they actually inherit them, they'll be in their mid-40s with their own lives already established. And here's what's really happening. We've created a system where financial stability increasingly depends on family wealth rather than individual effort or income. Even high earners, they actually struggle to get ahead without that initial launch pad from family. Location matters, timing matters, and debt definitely matters. You can be an attorney in the top 5% of income earners and still struggle to buy a home if you're starting from zero in an expensive market with student loans. And I will say that even several years ago, you didn't need to be in the 5% income bracket to be able to at least afford a place to live and have a little bit of breathing room after you paid your bills. Although again, side hustles were still a thing, and I've even had them throughout a lot of my career. But this creates two classes of people, those with family support and those without. And the gap between them is getting wider, not smaller. Now, here's some tips if you're a parent considering major financial help for your adult children, and here's what you need to know. So first, secure that oxygen mask on you first. Never, and this actually should really be a never, tap into your retirement accounts to help your kids. Those accounts have tax advantages and penalties for early withdrawal that you're just not going to get back. Now, second, talk to a professional. Before you take out a reverse mortgage or a HELOC to help your kids, talk to a financial expert that can show you what this actually looks like even before you make the move. Also, make sure that you understand the long-term impact on your own financial security. And third, set clear boundaries and exit strategies. So if you're going to help, decide upfront how much, for how long, and under what conditions the help stops. Don't make it open-ended. And fourth, do consider alternatives to cash, and maybe it's just letting them live at home temporarily while they save. We have offered this to our boys, and I personally feel that this is a good situation for our family. I would love for them to be able to pay down any kind of debt, stockpile some savings, and to max out their Roth IRAs. I'm not I used to joke about my kids living in the basement, and this was many, many years ago, but honestly, kicking a kid out when they turn 18, I mean, again, I think it's going to be great for us. But maybe it's also co-signing a loan rather than gifting money. Maybe it's helping with skills or connections rather than direct financial support. Now, the tip for you that if you're receiving help from family or hoping to, here's how to handle this responsibly. So first, don't assume help will always be there. Build your financial plan as if you're on your own, even if you're currently receiving support. Now that way, family help does become a bonus, not a necessity. And second, if you accept help, use it to build independence, not dependency. Don't use family money to maintain a lifestyle that you can't afford on your own. I would be using it to invest in your future earning potential or to get ahead on building wealth. And third, have honest conversations about expectations. So if it comes with conditions, make sure everyone understands what those are up front. Do not let that money become a tool for control or manipulation. And fourth, focus on building multiple income streams. And in today's economy, relying on a single job, it's not enough. Use any breathing room that family support provides to build side income, develop skills, or invest in your career advancement. And whether you're giving or receiving, remember this: the bank of mom and dad isn't sustainable at the scale that we're seeing. When half of parents are sacrificing their retirement to support adult children, that's not generosity, that is a system that is breaking down. We really need to have honest conversations about what is driving this. It is housing costs, education costs, and healthcare costs that have all outpaced wage growth for decades. The bank of mom and dad is a symptom, it is not the disease. but here's what you can control: your own financial education and your habits. Check out those videos that I made about building your emergency fund, about smart investing strategies, about making housing decisions that build wealth rather than drain it. Those fundamentals matter whether you have family support or not. And if you don't have family support, don't let that discourage you. It's harder, yes, but it's not impossible. Some of the most financially successful people that I know started with nothing and built everything themselves. I have the calluses to prove it. But these individuals just had to be more strategic, more disciplined, and more patient than people with family money. The bank of mom and dad isn't going away anytime soon, but it doesn't have to become a trap for anyone involved. Parents can help their children without sacrificing their own futures, and adult children, they can accept help without giving up their independence. And people without family support can still build wealth and financial security, but yes, it will take you a little bit longer. The key here is being intentional about these decisions rather than just drifting into them. I would love to know what your experience is with this. Are you an adult helping children, or are you the adult child receiving help from parents? Or are you building wealth on your own? I would love to hear your perspective in the comments, and be sure to like and subscribe if you found this video helpful. As always, my friends, I appreciate your time here, and I will catch you right back here on your next level up.